Good morning everyone and welcome to Morning Markets from True Potential on Monday the 5th of February. Today we'll look to the week ahead, but I also just wanted to comment a little bit on the US employment report from Friday. As we look to the week ahead, there will be a number of points which we'll be commenting on as an investment team, and we'll come on and discuss those in a moment or two. But firstly, I just wanted to build on the comments from Paul and Matt on Friday when they were discussing the US employment report and really the surprising strength that we saw in that data. 353,000 jobs created when the market was looking for something in the region of 180,000. It is a relatively volatile data set, but what I think was really interesting was when we look back at the past 2 months, both months were revised up in terms of the jobs that were being created. And that gives us a view over the last 3 months that we saw close to 480,000 jobs created in the US, further underpinning that strength that we continue to see in the US economy, and that which continues to challenge then the notion of when interest rates will be reduced in the US. That's particularly important given the commentary last week from the Federal Reserve with the interest rate decision, no change, but also in the context of Chair Powell's comments on the 60 Minutes show in the US over the weekend, where he did pour further cold water onto the thought of imminent interest rate reductions and indeed pushing those out. So markets are certainly starting to digest that, and that will be something that will certainly play into the market environment this week, particularly as it relates to expectations of interest rate cuts and what does that mean for how sovereign bonds in the US but also globally perform over the week ahead. I think when we also look to then the week ahead from an economic point of view, much lighter week in comparison to last week. We have the services data, the US ISM services data today. That'll be important. If we cast our minds back to last month, it was a relatively weak report that brought more into the fore further interest rate cuts, that March coming more into view. That's certainly off the table at the moment. So important to see how that data point interacts with the employment report. We also have data out of Europe in terms of retail activity. And then towards the end of the week, our focus will shift to China, where we get inflation data, but it would be probably more right and proper to term that as the deflationary data from China, which it has been over recent months. We need to see that turning more into inflation, given the backdrop that we've got for the Chinese economy. Also this week, we'll continue with company reporting as it relates to the full year of 2023 and the final quarter. Again, the market will be looking for trends there in terms of demand, but also employment conditions and the outlook for employment from companies. We'll leave it there for today, but please do join us again tomorrow.